All right. Should be a pretty quick update because everything we talked about last night is playing out. And that was the high probability we would get this bounce. And then from this bounce, you are looking for a gap filled right around 606.8. And then from there, we have two options. We could either get a lower high rejection, which is going to require us to break the low here down at 594. This will be bearish because once we get a lower high into a lower low, that is telling us of a potential bear trend. But while we have the bull trend, the highest probability is that we just continue higher towards that price target at 616. So I talked about last night how there was a good chance if the bull trend is going to continue, then we just put in our higher low yesterday, which was right there at 594, and off of 594 the new all-time high price target of 616 is achievable, and of course even as high as up to 624 or higher. Remember, this is just as simple as bull trend until it's not, because we're following technicals and price action on the chart. And if I just clean up the chart a little bit, you can see that all we have is price action above all of these moving averages, and every single moving average has that positive slope within a bull trend. So there is a very good chance this bull trend is still trending higher until price tells us otherwise. Now, to respect the bear scenario would be the rejection and the break of this low, and then from there you would just get risk off and be at least expecting 584. But this is the least likely, which means the lowest probability. So if you are trading the lowest probability, you can do that, but then you need to manage risk at a breakout to a brand new all-time high. And anytime a bull market breaks out to a brand new all-time high, the sky's the limit. That's what I call that blue skies breakout, where there's really no true resistance at an all-time high until we find some sellers and we stop seeing demand from the buy side. And then of course, eventually a top is in and we either get a pullback or a correction, and we rinse and repeat within a bull market. This is bull market, higher low, higher high, textbook bull trending behavior. Lots of people are fighting the trend, and those people are damaging their trading accounts because of it. So don't be that guy that is fighting the bull trend. If you do not want to be bullish, you have to ask yourself, why are you even trading at all if you're not willing to follow the chart? But if you're just so fundamentally bearish you can't get yourself to buy, then at least just sit in cash. There's no reason trying to short a bull trend and losing money about it. So focus on the chart. This is going to be as simple as SPY is bullish as long as it's above 594. If it breaks down below 594, then and only then will I be starting to talk about more bearish probability. On the NASDAQ 100 triple Qs, we were up 1.48% today, and just like SPY, we have the possibility to continue higher here to fill that gap at 528. The bearish probabilities are the lowest, but there is a chance of a lower high rejection. A break of the low at 510 will confirm the bearish scenario. If we get the bearish scenario, then and only then I'll be looking for 493, but more than likely we're going to continue higher into the 540s as long as the triple Qs can continue to close above 510. Remember, just like SPY, these are all higher lows. Price action is trying to break above all these moving averages, albeit we are lagging a bit behind the S&P 500, but we could be one more day away from breaking those highs, confirming a bull trend, and continuing to a new all-time high, which would easily take us out into February. So this is going to require patience, as all swing trading does. If you're a day trader, it's just as simple as going to cash every night and reacting to the chart. And all of these critical levels are important for you swing traders because you need to be staying bullish above 510. If we break 510, we can get more bearish, but right now it's bullish above 510, and keep it as simple as that, with a short-term target higher towards 528 to 530 and the longer-term target being 546 while we're above 510. Don't overcomplicate it. It is just that simple. Always manage risk because, of course, there's times we're going to lose trades, but our goal as traders is to manage risk so that we lose less money than the times that we win money, and that will allow us to be profitable over time. If you want to come crush this market and get the exact trades that I am taking with the percent allocations for TQQQ or SQQQ, you can join my TSC Trade Alerts, which you can find out how to join in the description of this video. And in TSC Trade Alerts, we did hit another brand new all-time high today, so we are still crushing this market, and the market is not even close to a brand new all-time high. So these are the trades you're getting from me, and this will ensure you absolutely crush this market this year. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.